All right, Prakash, I think we have a bit of an audio glitch there. We'll try to reconnect to you, but let's get in Siddharth then. Siddharth, these numbers look pretty good on the face of it. You have good NI numbers as well. Your take, the numbers look good enough. Are we just seeing some routine profit booking on the stock? Do these numbers look very good to you?
Yes, certainly the numbers are definitely better than what initially we thought about, and both on the loan growth front as well as on the bottom line front. And surprisingly, the credit cost, the provisions absolute amount has been pretty low than what initially I thought would be, given the current environment. So there has been positive surprise from all counts, I would say, from the result.
So Siddharth, it's been a phenomenal story this year for Yes Bank last 12 months. The stock is, of course, not back at those 1400, higher levels as yet. But do you see it going there on the back of these numbers? Or do you think valuation concerns will eventually catch up now?
I think it's quite possible that you might see some more interest coming in post this result, and every quarter we feel that possibly there would be some slowdown, but Yes Bank has really positively surprised every quarter, both on the top line and bottom line front. And this quarter was definitely commendable, given that given this environment, the credit cost has been contained at a very low level. So I think that the upside cannot rule out. Definitely there is.
Prakash, let's just get Prakash. And Prakash, we lost your line. There was bad audio.
Yeah.
So same question, Nigel's question. Is there more to the Yes Bank story? Is it fully captured at the current levels? Can it aim at 1440 once again?
Yeah. So the answer is yes, and I'll tell you why I'm saying yes to Yes Bank's move back to those highs. Two reasons. One is the growth that they've clocked in this quarter, the December quarter, in the tough environment that we spoke about, justifies the move that we've seen in the last 2 months. That's one. Secondly, post the QIP deferment of sorts, they've also been kind of fortunate that they really didn't need that kind of capital because of the incremental deposit inflow. So that's been very well timed of sorts, and they've been fortunate, as I said. Going forward,
in disguise, didn't it?
Yeah, absolutely. So that's the reason why the stock has had a stellar performance as compared to its peers. And the second reason which I was mentioning is the fee-based income component is what I would watch out for very closely. What is the management view in terms of that changing? Because the stock is fully priced in terms of the credit growth, the margins, the NIMs have been fairly robust. All that's kind of priced in. You're paying a fairly high price to book value multiple as compared to other banks. If the fee franchise goes up, fee-based income franchise goes up significantly, then you have that 1450 happening very soon. So I would look out for that. But I don't see a sell-off except for some profit booking on news of today's session. It would probably resume its upward journey once the fee-based income also is a significant component without upsetting the credit growth cycle.
Prakash, commenting on your fee-based income, the other income is up 33.8% on a YOY basis, while 12.5% on a quarter-on-quarter basis. So obviously, we don't have the breakup in what is the core fee income and how much is the treasury gains. But it is heartening to see. And obviously, even if you check the loan growth on a sequential basis is at 6%. So there must have been, in my estimate or my guess, strong fee income coming in because... Why I'm saying this is, if you look at the loan mix, it has turned more towards corporates. So corporates obviously give you a higher fee income. So if you check last quarter, 67.9% of the loan book was in corporates, which has moved up to 68.9. So just to comment on your fee income, I expect that this other income growth would have come from loan book as it has tilted more towards the corporate side.
Yeah, so that is a big positive. So when you dissect the internals, apart from the 800 crore profit and the NIM growth expansion of CASA, that's what is going to be more justified. That is going to be used to justify a higher price to book value multiple, and hence the stock would again start finding favor, which it had lost in that debacle that we saw on the QIP event. So I'm definite that it's going to catch interest, and a lot of shifts would take place from some of the smaller banks which haven't probably delivered, like DCB and all, to the expectations. So this would move back towards size, which Surbi was referring to.
So Ravikant and Siddharth, let's get your thoughts in. You'll go back to your numbers again. But roughly speaking, the new targets that you might put out on Yes Bank, are they going to be north of 1400? Just some rough sense, Siddharth, looking at the initial trends?
Yeah, it would be above that. I mean, possibly, as I told you earlier, that another 10% up move from here is something, I would look from here. And post this quarter result, I'm fairly, confident. I would say that, the coming quarter also, we may not see many negative happenings within the numbers. So I think no negative itself will be a positive, and you might see more upside in the stock in the coming months.
All right, then let's get in one final view. Then Nilesh Parekh as well of Edelweiss Securities joins in. Nilesh, I mean, we saw a bit of a downtick in the stock. Appeared to be some profit booking. The numbers look pretty good, actually, or pretty decent in comparison to your estimates. Did they meet them? Did they beat them? And what do you do with the stock from here? It's rallied close to 22% in less than a month.
Yeah. Hi. Good afternoon. So as I would mention in the morning, I think this stock, in terms of what they've delivered on the during the quarter, we've clearly seen them, beat all our numbers in terms of both NI profit and on the other income side. One of the things I think is on the NPLs also. This was one of the things that people were closely watching for, and I think that's performance also has been quite within expected lines. So broadly, it's an all-round, strong performance by Yes Bank, which is something that they've delivered over the last many quarters. In terms of, I think we continue to like the bank in terms of, yes, I agree, there's been a strong, move in the last 1 month, but this is on the back of, the correction that we'd seen post the demonetization also. So they've recouped a good amount of ground, and I think given the performance that they've seen, and I think we'll probably wait for the management commentary in terms of, their growth projections for the next year. But overall, I think would continue to kind of be positive on the name and continues to remain a top pick in the sector.
So would you continue, would you rework your numbers on the upside looking at this base, or would you continue with your estimates running, for the coming quarters?
So, see, clearly, I think this quarter, they've seen a beat in terms of our numbers, and it's largely coming on the back of a loan growth, which is at 38%. Now, if we assume that the loan growth is sticky, then clearly we will have to rework our numbers on the positive side. And, so I think, we would get to do that post the management discussion that we'll have, and we'll kind of come up with an update post that.
All right, Nilesh, Siddharth, Ravikant and Prakash, thank you so much, gentlemen, for being with us and taking us through the Yes Bank fine print. Yet another steady quarter. Stock, however, selling off a little bit of profit booking. That's why we'll take your leave, but closing bell comes up next.